Hello everybody and welcome back to the channel. My name is Smart Money Mo, and in today's video we're going to be doing a full SMC swing strategy breakdown. I'm going to be using a 1 to 10 risk reward Euro USD trade that I took last week and that I sent as a signal, as you guys can see on the screen, to break down this strategy for you guys as I used this strategy to take that trade. And so if you want to learn the rest of the strategies that I used to trade and you want to, gain in on my signals as well, make sure you check out the mentorship. It's a one-time fee of £120. You gain all of the benefits listed over here: a course, community members, private videos, weekly calls, signals, 8 strategies going into 2023, and a full smart money concepts breakdown. So yeah, click the first link in the description if you want to gain access to all of these benefits. But without further ado, let's get right into today's video. Alright everyone, let's get started with step 1 of this swing strategy. Now, when we are swinging, we might be holding our trades for a prolonged period of time, okay? So we need to understand what's going on the higher time frame. So the first thing I'm going to do is I'm going to check the higher time frame, so the 4 hour, the 2 hour, the 8 hour, sometimes the daily, right? And I'm going to look to see where the price is oversold or overbought, right? And all that means is checking my high time frame and seeing where price is in relation to the overall trend. Okay, so let's say we're bullish, as you guys can see here, and overall we're moving towards the upside. Okay, so what I'm going to do is I'm going to draw in like a sort of line where price is sort of bouncing off from. Because we are bullish, we know that price is going to be heading towards the upside, and it's going to be coming in, maybe mitigating demand zones that are low, and it's going to be going up, right? So I can sort of draw in a trend line, just a general trend, to see where price is going, so I can understand the higher time frame and see where price is in relation to the overall trend, so I can understand whether price is overbought or oversold. I've got a full video guide explaining this sort of thing, this concept, in my channel. I think the video is called Understanding Market Structure, right? So yeah, if you want to get a complete understanding of what I'm talking about in terms of oversold and overbought, then go watch that video. However, just as a general idea, if price is further away from this trend line, then we know that price is overbought, okay? Because, we can see, especially since there's a break of structure as well on the higher time frame, price is going to retrace a little and make its way back into this trend line where it keeps bouncing off of from. I'm not buying at this trend line. I'm not doing anything with this trend line other than understanding whether price is overbought or oversold, okay? So if we were over here, or over here, or over here, or over here, I can understand price and being oversold because we are very, very close to this trend line. The further price is away from this trend line, the more overbought it is. Therefore, the more likely it is that it's going to start retracing and making its way back down to the sort of trend line, okay? So let's say I'm over here. Since I'm over here in price, I know that price is oversold because in relation to where the current trend is, we're nowhere near this trend line, okay? We're further away from it. So I'm expecting a retracement. As well as this, I can see that price has broken off this higher time frame structure, and after we break higher time frame structure towards the upside, we see a small retracement towards the downside, okay? So right now I've checked and I've seen that price is oversold. Now let's move on to the next slide to see what we do from here. So the next thing we do is we check for the on the middle time frame. So we're talking here about the 30-minute, 45-minute, or the hourly time frame, those 3 sort of time frames, right? We're going to check for a change of character or an indication supporting your desired move, okay? So on the previous slide, we were over here, all right? Now to that exact moment, once we're over here in price, right, we're going to go on to, now we're on the middle time frame here. So let's say this is the 1 hour slash 30-minute. Okay. Now what I'm going to do is I'm going to just simply look for a break of structure towards the downside, because my bias is that price is oversold. So I'm expecting retracement towards the downside. Okay. So what I'm going to do is I'm going to go on the 1 hour or the 30-minute. I'm going to look for a break of structure towards the downside. Okay. I'm just going to be looking for a change of character, a change in the direction from previously being very bullish, as you guys can see here, to starting to become bearish. So that's what I'm going to be looking for on the 30-minute or the 1 hour time frame. Very, very simple step, right? Nothing too complicated yet. All right, so move on to the next step. Number 3, find your entry from supply and demand that has taken liquidity or inducement. Now, this is actually the entry process for the trade. So after we've spotted our change of character on this 1 hour or 30 minute, right, as you guys can see here with the previous slide, we're then going to move on to an actual entry, right? So following the change of character, we're going to look for a supply zone. So following the narrative that we've been talking about, I'm going to look for a supply zone, and the only supply zones that I will take entries from are ones that have a liquidity grab liquidity sweep, or the ones that have inducement. Okay, so those are the only zones that I'll be taking. And if you want an explanation as to what zones I pick, go watch my most recent video and some of the other videos that I'll link in the description. Okay, so the key thing is, after I've seen my change of character, for my entry zone, I'm looking for a zone that has swept liquidity and that has inducement. Okay, swept liquidity and has inducement, exactly like this that we have here on the chart. And I can look at this on the 15 minute, the 30 minute, the 10 minute, the 5 minute, whatever opportunity presents itself, I can be looking for this. All right, you don't want to go too low like the 1 minute, because the win rate isn't as great. You want to be sticking to the 15 and the 30 minute. Okay, now once we've seen step 1, step 2, now step 3, let's move on to step 4, which is all about setting your take profit. Because to be honest, setting your take profit is one of the most important things when sort of swinging, because that's what's going to help you manage the trade. And in terms of our take profit, we want to be setting that at levels of fair value gap or at opposing levels of supply and demand. Okay, so let's say we're selling from all the way up here. We want to be going back onto the higher time frame, as I mentioned here. We want to be going back onto the higher time frame, and I want to be looking at fair value gap or supply and demand. So in this case, I want to be looking at demand zones that price is going to be tagging in from. Okay, so let's say over here I have a lot of fair value gap, then this can be an area where I could potentially be taking partials or full take profit, right? Let's say over here I have a demand zone. I know that price might come to this demand zone and bounce off of it and continue its trend, so that from this demand zone I should take my full profits. Okay, and keep in mind this is on the higher time frame, so this huge move is the move that we're going to be looking for to swing, right? Same as this move, same as this move, same as this move. Okay, so yeah guys, that is the 4-step process to swinging using my strategy. Number 1, you look for where the price is oversold or overbought on the higher time frame. Number 2, you check the middle time frame, so the 1 hour 30 minute, for a change of character or any sort of indication that price is going to be following the bias that you found over here. Okay, the number 3 is find your entry from a supply and demand zone that has taken liquidity and has inducement. All right, so after I see this change of character on the middle time frame, I go on to the 15 minute or the 30 minute, and I look for a liquidity sweep, for supply zone, for inducement. All right, then we look to set our take profit on the higher time frame again, because we're going to be swinging, we're going to be holding for multiple days at a fair value gap or at a opposing demand zone. In this example, just like so here. Okay, those are the exact steps that I went about taking when I sent out that signal on EURUSD that has now run for 1 to 10 RR and for 150 pips. Right, it was a big move on EURUSD last week, as you guys will see in a sec. Before I go onto that raw live chart, I'm just going to quickly go over that. If you guys are looking to take one-to-one sessions with me, do go into the Telegram DMs in the link in the description, right? Because I have had a couple people, asking if I still do one-to-ones or anything like that. If you would like one-to-one personal calls, right, where we go through your trading, I personally teach you one-to-one on Zoom, then check the link in the description, right? But anyways, guys, without further ado, let's get right into the 1 to 10 breakdown on EURUSD, a trade that was sent to my team. So yeah, let's get into that right now. All right, everyone. So to get started with this breakdown, what I'm going to do is I'm going to go on to EURUSD. I'm going to go on to the daily time frame, and we're going to go straight away with step 1, right? And step 1 is checking out the higher time frame bias, right? What am I seeing on the higher time frame? Let me get in a trend line and let me see what sort of price is saying whether we're overbought or oversold. Okay, so number one, what I did was I draw a general trend line on Euro USD. I saw price was bouncing off of this trend line. You guys can see here, price is respecting it. I'm not taking any entries from the trend line. I don't trade like that. But what I'm saying is price is clearly overbought, right? We are very far away from this trend line. And in relation to the current trend, we are overbought, okay? And that was my sort of first pointer telling me that we are overbought. My second thing telling me that we were overbought is because we had seen a massive push towards the upside on EU in just the span of a couple of days. We had a 400 pip push up towards the upside. And I had seen the loss of momentum, a very big loss in momentum, okay? Compare this candle to this candle, you can see price is definitely losing momentum, okay? And, you know, these are some sort of doji candles as well, right? So I'm expecting price to retrace towards the downside for A, the reason of we're being overbought, B, because I see the loss of momentum, C, because there's a lot of fair value gap to fill in over here as well. We have tons of fair value gap that price needs to fill in. And D, because we have this break of structure here, and after we have a break of structure, we expect retracement. Okay, so I have 4 reasons telling me that price is going to sell off on the daily time frame on Euro USD. So that is the first step done. I've sorted out my higher time frame bias, and that is we are going to be bearish for the next couple of days on Euro USD. Now we'll go on to the second step, which is heading over to the middle time frame and seeing whether we can find a change of character. All right, so what I did was here on the middle time frame, again, I'm supported in my point that we are seeing a loss of momentum because we're consolidating a lot, especially over here. We consolidated greatly here, and we've seen a breakout. So now I'm expecting a sort of price cycle. So I see a consolidation, then I see a breakout, then I see a break of structure, then I see mitigation, and then continuation. Okay, so I'm looking for that to play out. And all I'm simply looking for is, in terms of the steps, is a change of character. So I saw there was this low here, these equal lows, and I'm looking for price to break this level, telling me that we have a indication that we're moving towards downside. Okay, so put that break of structure in there, and let's see what price does. 1, 2, 3, 45. Okay, clearly see here price closes below this level. We have a clear break of structure. Almost acting as a change of character, if you will, market structure shift, whatever you want to call it, right? So we have that now, and that is the confirmation that I needed so that we can start going bearish. Now what I'm going to do is I'm going to stay on, for example, the 30-minute. So that was step 2 done. We have our change of character. Now we're going to go on to step 3. We're going to look for a supply zone that has taken out liquidity and that has inducement. All right. So I'm going to wait here on the 30-minute. Okay, so I see price breaking this low over here. So we have a break of structure of this low, and I also see price creating this supply zone on the 30-minute time frame. Okay, and this supply zone is also a valid supply zone. So now we're in step 3. We're looking for that supply and demand zone that is valid. This supply zone has a liquidity grab in 2 areas. So it grabs this trendline liquidity and it grabs this liquidity over here. And we also have the inducement that I'm looking for. Okay, price is going to induce these highs, and it's going to take out this supply zone. So all of the early sellers in this market are going to get induced. Their liquidity is going to be grabbed, and price is going to tap into this supply zone over here. Okay, that's the reason why I picked this supply zone. Also, we have strong bearish order flow now on Euro USD. You can see price respected this high. These are all protected highs, right? We have bearish order flow because we're mitigating this supply, mitigating this supply. Now we're mitigating this supply. So this is definitely strong bearish order flow. Okay, so that is step 3 done. We have our valid supply zone, right? We have our valid entry zone. 14 pip stop loss, lovely stop loss. Now we move on to step 4, which is talking about targets. So we're going to switch back onto the higher time frame to look for targets. And for targets, I kept it very simple. I knew that we had a lot of this fair value gap. Remember when I was talking about on the daily time frame, we have a lot of fair value gap to fill in. So I went on to the 4 hour and I searched for that fair value gap, and I saw that we had fair value gap here. And I actually placed my my take profit at 775. So just about here. This was the signal that I gave. So yeah, it was a 1 to 10 risk to reward right in the 50% of this sort of move over here, from like sort of this low to like this high, right in the 50%, this was where my take profit was. You can place your take profit at this level of demand that we know is going to be fill out. You can place it at this level of demand. You can place it really anywhere in this sort of range where the fair value gap is going to be filled. Okay, somewhere over here would be overly ambitious in my opinion. I'd stick to something moderate, like a 1 to 10 risk to reward, holding up until like sort of here. This is a very, very great trade. Okay, 1 to 10 risk to reward, that's 10% on your account. You could pass your account with this trade. Okay, so that is step 4 done as well. What we have gone through, we have gone through a 4-step process, and we have found this 1 to 10 risk to reward trade. We started off with the higher time frame, then we went on to the 30-minute looking for that market structure shift. Now we're on the 30-minute looking for the supply zone. Now we're on the 4-hour looking for our targets. And as you guys will see, price taps in that exact point on the 20th of July. And then we end up holding for a couple of days and over a weekend, I'm pretty sure as well, hence the gap. And we end up getting full take profits, 150 pips for 4 days held, just about 4 days held, and a 1 to 10 risk to reward ratio, guys. This is the power of understanding the higher time frame, okay? Because you are able to catch the big moves in the market. We're able to catch the 1 to 10 risk to reward. Price came down and filled out all of that 4-hour fair value gap that I was talking about. Look, we're filling out that demand zone. Now we're starting to fill in all of this fair value gap as well. Okay? But yeah, guys, hopefully you found this video educational. Hopefully you go on to catch the big moves as well, catching some big RRs as well. But yeah, thank you all very much for watching this video. If you would like mentoring from me one-to-one, DM me on Telegram. If you'd like to join the mentorship, check the link in the description. Thank you all very much, and I wish you the best.